Hi everyone, Amy Parsons here from Maxbrook Realtors in Birmingham, Michigan. I hope you are having a great Wednesday. I am certainly happier this week than most weeks in quarantine because effective tomorrow, May 7th, Michigan realtors are officially allowed to start showing homes again. So I am out showing all weekend from the Woodward Corridor area to Grand Blanc and over in the Plymouth area. So with that being said, we do have buyers out there, whether they're first-time home buyers or second-time home buyers, who have a lot of questions. And that brings us to questions about mortgage-related issues and changes. So with me today, I have Ronya Grohman from John Adams Mortgage. Ronya has been with the company for 17 years. And in those 17 years, she has consecutively ranked in the top 3 of the company. So Ronya, thank you so much for coming and chatting with us about mortgages. So as a loan officer, what is top of mind for your clients or future home buyers right now?
I think forbearance, absolutely. It's a very popular topic right now. And forbearance is to be used, I think, as the last resort. I always would recommend the clients making their payments on time and not electing the forbearance option. And how the forbearance works is it allows the homeowners to delay their mortgage payments. Not to be confused with loan forgiveness. The key word here is delay. Those payments will eventually have to be paid back. And they allow them to delay them for up to 6 months right now. And how it would work is if your mortgage payment was $1,000 and you had a 6-month forbearance period, after 6 months, you're going to owe your lender $6,000. And that's not necessarily going to be feasible, especially for people who haven't been working. So they do have a couple options to give you once the forbearance period has lapsed. One being you can stretch out that $6,000 over a 12-month period of time, which result in your current mortgage payments increasing. The other option, which I feel is going to be the most popular of options, is it'll allow them to take that $6,000 and add it to their loan balance. So if they currently owed $100,000 and there was $6,000 in forbearance delay, your balance at the end of the loan will be $106,000.
Okay. So to be clear, that is with all mortgage lenders across the nation, correct?
Correct. Yep, absolutely.
Okay. And do you recommend, oh, I'm sorry, go ahead.
No, it's okay. But I was just going to say, what a lot of people also aren't realizing too is there's an escrow account associated with some of these mortgage payments. So they can't necessarily forgive those, or else there'll be a deficiency when our tax bills come due here in July and then again in December. So they're allowing the forbearance period to delay the principal and interest payments, but not the escrow portion.
Okay. So do you recommend homeowners to call their lenders then before they make any decisions about forbearance or anything like that?
Yeah, absolutely. You know, right now, the thing that's most constant is change. Things are constantly evolving. For example, yesterday, the guideline after somebody being in forbearance to qualify for a new mortgage was that a 12-month period of time had to have lapsed from the ending of the forbearance. But as of a couple hours ago, a buyer or a borrower who's going to be refinancing can close on a new transaction the day after the forbearance period has ended. So when homeowners are calling their lender and their loan servicer to set up forbearance, they're not really being told the guidelines in between. But one thing people have been asking me too is if the forbearance, if they choose that option, is it going to impact their credit score? And it's not. It's going to be noted on their credit report that there is a loan that has been indicated going into forbearance, but they're not going to be reporting any kind of late payments, and it's not going to affect your credit score.
Oh, wow. I mean, that's great news then for people who do have to make that decision.
Yeah, absolutely.
And another hot topic we've been hearing a lot about are interest rates. So tell us a little bit about what's going on with interest rates.
Yeah, interest rates are at levels I've never seen in my career. It's been a roller coaster. They're historically low levels, and I think it's the lowest the country's ever seen. And compared to a year ago, interest rates are a little over 1% lower. So it's a great time for people to dive into the market, whether it's to purchase a home or take advantage of the rates and refinance. A lot of clients that have paid cash in the past are now wanting to cash out their equity in their home, get a new mortgage since they're so low, and increase their liquidity. And now is the perfect time to do that.
Okay. And how long do we expect those interest rates to remain where they are at?
That's $1 million question. Everybody asks me, my crystal ball doesn't work. We've seen extreme volatility. So I don't know. I think that some economists are saying that we can expect interest rates to stay low for, through the end of the summer.
Okay.
But the market is just so unpredictable right now that, 90 days ago, interest rates, that's when they dropped. The 30-year fixed was around 3% and hovered over that for, a couple of weeks. And then when all the economic data out there was saying that interest rates should be in the 2s, the interest rate soared to the 4s and then quickly came back down to the 3s. So, nothing's making sense right now. So either way, if you're looking at refinancing, now is definitely the time to jump in because we just don't know.
Okay. So if you're considering it, just take the plunge and do it.
Yes.
Okay. So switching gears a bit, can you clarify how long a pre-approval is effective and if any of these guidelines have changed since pre-COVID?
Yeah, good question. So pre-approvals are good for 120 days. And, however, even if a buyer was pre-approved 30 days ago or even 2 weeks ago, they really need to reach out to, myself or their lender and make sure that they still qualify for the program in which they were applying for. Some of these large banks just announced that if you have a credit score below 700, that you now have to put 20% down.
That's
going to take, yeah, that's going to take a lot of buyers out of the market. First-time home buyers don't have 20% down.
Sure.
So, yeah, so I think that, that's a really aggressive change. We're nowhere near that change. We have no intention on making that kind of change. We're still funding and lending 3% down loans still, credit scores as low as 640. So we still offer a majority of the programs we did before, but it is really important to get pre-approved, you should say, just to, kind of connect. And especially with the rates going lower again, they might be able to qualify for a higher purchase price.
Okay. And so just to reiterate, so for an FHA, what is the minimum credit score right now?
Right now it's 640.
With across the board nationwide?
No, that's with us.
Okay.
I think that, FHA has their minimum guidelines, but then lenders also have theirs. And I think that right after this whole thing happened, the credit score went up to a minimum of 680. And now it's back down to 640.
It's back down to 640. And then with conventional, could you repeat the minimum credit score for John Adams?
As of today.
Yeah, right.
As of today, for a conventional loan, it's a 660.
660. Okay, great.
Yep.
And that's reasonable. I mean, that's back where we were seeing back before COVID happened and all of the crazy regulations.
Yeah, absolutely.
Strict regulations, I should say. And so another question a lot of my buyers seem to be curious about is the unemployment. We see all of these headlines with unemployment and how our economy is failing and just negative news. But with unemployment and somebody being either unemployed or furloughed and looking to purchase a home, is their unemployment pay going to be factored into their income, their debt to income ratio?
Unfortunately, no. So unemployment income is going to be considered temporary.
Okay.
And, unfortunately, some people might be on unemployment and then they'll get let go in a couple weeks. So it's not guaranteed income. So the buyers would have to wait until they are back to work. And all the lender would need to do is call and verify that they are back at work at the same rate of pay.
Okay. And
so if you have a client that wrote an offer and was in the middle of the loan process and got furloughed or on unemployment, we're not going to withdraw those loans. We're going to wait until they're back to work and then verify the employment, and then you can close within a couple of days.
Okay, that's great to hear too, because I know a lot of clients have been asking me about that as well.
Yeah.
And so to verify unemployment, if you're already a buyer in a transaction, how many days prior to closing will you verify unemployment
We
or
will,
employment, I should say?
yeah, it used to be 3 days. Now it's 2 days. And we're not allowed to use any kind of automated system for any kind of verifications. It does have to be from a direct employer, whether it be a phone call or an email stating that they are still working and what their rate of pay is.
Well, thank you, Ronya, so much for answering questions that my buyers have been having over the past few weeks. We really appreciate it.
Of
And for
course.
everybody out there, if you have any other questions that we did not touch on, or if you just want to hear more about the lending and pre-approval process, feel free to contact myself or Ronya. And Ronya, if you want to give your contact information on how everybody can get a hold of you.
Yeah, of course. Thank you for having me. My cell phone number is 248-709-9390.
Thank you so much.
You're welcome.